the fact that America just hit Iran and how smart investors are going to take advantage of some of this chaos. And I wanted to go live today because I felt like we had some big breaking news overnight. And I want to talk about how that's going to affect or can affect us as investors, us as consumers, and get a feel for exactly how that may play on what we want to do with our money, especially in this upcoming week. Now, what just happened really in Iran when America struck Iran? It's going to have an effect on markets. It's going to have an effect on your money and your wallet. So that's why I said, listen, this is a money channel. We deal with personal finance and all the, getting out of debt, and we deal with, how to invest, and we deal with how to manage your money. We'll deal with all that, but we also want to deal with things that are current, that are happening right now that we need to be aware of from a small business standpoint, a consumer standpoint, a investor standpoint, right? So in this live video, I want to break down what happened, talk about the facts, how it's going to impact our wallet and our investment choices, and what smart investors and smart consumers are going to be doing right now. And you'll see me, guys, I'm looking over here at my computer because stuff is kind of breaking right now as I speak. So I want to kind of make sure I'm up to par on what we're talking about on this video. So just bear with me here as I kind of thumb through this. I'm also checking my live feed to see who's popping in here and seeing who we got. So I appreciate you guys being here. Let me make some changes here real quick. And as you come in, guys, let me know where you're coming in from. What city, state, country, region, hemisphere, continent are you checking in from? Let me know that as you drop in here as well. So I would appreciate that. Let's see here. Let's do this. Bada bang, bada bang. All right. So who do we got here? Corpus Christi, Texas in the house. Emmanuel, good to have you. Baytown, Texas, near Houston. We got a bunch of Texas folks checking in. Toronto, Canada is in the house. This stuff is going to be relevant for all of us because all of us are consumers, right? Somebody over in South Korea, South Africa's in the house. Good to have you. East St. Louis is in the house. East St. Louis, right, is in the house. So glad to have you here as well. If you're catching this live or even if you're on replay, smash the like button for me so this information gets out to more and more people because we want a lot of folks to understand this from a plain language point of view. And there's people that need to hear it. So also, first things first, let's just jump right into it. No more. Okay, so what happened? Let me just give you some facts, okay? Last night in a surprise move, and it was sort of a surprise because just a few days earlier, Trump had mentioned, hey, we're going to see what happens over the next couple of weeks. Well, of course, when you're talking to the media, you can't give them exactly what you're going to do. But as commander-in-chief of the military, Donald Trump issued some strikes, I think 3 strikes, 3 nuclear sites over in Iran. Now, this isn't, let me just say this up front. This is not political commentary, guys, okay? Whether you agree or you disagree with the strikes, this is not the video for you because I'm not going to get into good, bad, etc. Whether you think Congress should have been notified before the strikes happened, that's not this video, okay? All I'm giving on this video is the facts, okay? And then also on this video, I want to discuss the stock market and what's happening in the markets and what we should be doing as stock market investors, people that invest in the stock market or stocks in the stock market. So that's what this video is about. It's not about agree, disagree, hate, don't like, Congress should have did this, Congress. I don't really want to get into all that because I don't want to turn this into a political video, right? This is about money. And like, dislike, it's not really an issue. What happened? The operation was dubbed, what do they call it? Operation Midnight Hammer or something like that, right? I think that's what it was. And I'm looking at a few things on my screen too, guys, because there's, like I said, there's things happening. So I think I read somewhere, maybe it was CBS News or something. This was the first U.S. military strike on Iranian soil since 1979, right? So what it was a signal was, it was a signal for that it was a dramatic escalation in the conflict between Iran and Israel, right? That conflict has been escalated big time now that America has struck, right? And America struck or targeted three main nuclear sites, right? I'm not going to name the sites, but that is basically that's the facts. And President Trump had announced the strikes, stating that, Iran's nuclear capabilities had been obliterated or completely wiped out, or whatever he said. I think I read that. And the Pentagon went on to confirm that. This is important background because you got to know the background a little bit to kind of before we get into the stocks and the meat of what we want to talk about. So there were some B-12 or B-2, I said B-12, B-2 stealth bombers that went out from somewhere in Whitman Air Force Base in Missouri, actually, a straight flight. But anyway, they dropped what they call the MOPS, the massive ordnance, help me, penetrators, big bombs hitting the nuclear sites in Iran. There were approximately 100, 150 or so U.S. aircraft involved, participating in the exercise, right? I say exercise, but the strike. And it was pretty serious, right? There was no engagement from Iran with these strikes. And according to news reports, they were in and out. No aircraft, U.S. aircraft were threatened or anything like that. And I also want to say up front, prayers to those family members who have people who are involved or who may be involved or who may get involved, wherever you are in the world, right? Whether you're in America, whether you're in the air, on the ground, wherever you are. Prayers out to those people as well that are getting involved in this, right? Or have to be involved. And the goal was to, dismantle Iran's nuclear capabilities, nuclear ability to actually build and form and reform and make nuclear capabilities, nuclear weapons, right? So that's what happened, right? And was Congress given prior notice, or did Congress approve? No. Was Congress given prior notice? I believe so. I can't be certain on that, but many people are saying Congress should have approved and so forth, right? Sort of what they did back in the early 1990s when, remember, President Bush had made his strikes out there in the Mideast as well. So all that happened, right? Important to know what's going on, to stay in the know, right? Especially in the know if you're invested in the stock market and if you're a consumer or you have people that may be involved, right? Hey, somebody from France, good to have you here. Appreciate you being here. So let's talk about the implications of this on the stock market. How you doing, Show Enough? Good to have you here. Glad to be here, guys. Hopefully we don't have any clowns pop up in the chat. If we do, no big deal. I don't mind a few clowns here and there, but we deal with clowns, right? So how do we deal with the stock market, and how is the stock market reacting right now? Okay. Overall equity dip. We know that's going to happen, right? Because when things get crazy and there's chaos that happens, typically what investors do, they're going to hit the sell button. Boop, sell, right? Especially after you have such major geopolitical stuff happen like what happened last night. You're going to see, especially your institutional investors, which are your largest investors, they're going to hit the sell button, not because they're panicking. Okay, let's make that clear. They're not selling because they're panicking. Okay? They're selling because they want to get out before it goes down, obviously, but it's not really in the same panicking mode that we talk about panic, right? Let's see, somebody dropped in here and said we got Florida in the house. And I like to every now and then just acknowledge the people that drop in, guys, so bear with me. I don't mean to, cut off my stream of consciousness, but I just want to have just acknowledge the people that come in, and thank you guys for being here. North Carolina's here. Appreciate you. Somebody said bonjour from France. Good to have you. Thank you for being here. Let's see here. Orlando, Florida's here. Appreciate you being here. And some people are making comments. Feel free to talk in the comment section, guys. And but keep it respectful in the comments as well, right? We want to keep it respectful in the comments as well. But a lot of large investors want to get out before things go down. And now listen, I'm going to say this up front too. You may be asking yourself, well, hold up, smart money, bro, whatever. Hold up. You always tell people that when things are going haywire, don't panic and chill and just keep dollar cost averaging. And the reason that you say that I say keep dollar cost averaging is because when you dollar cost average, that's more for the average investor, for us, right? Okay, you don't have a team of 20 different people that are helping you, right? You don't have a team of 10 different investors that are watching your stocks and watching the market and watching the volatility and saying, okay, do this, do that, let's pull this, let's pull that. You don't have that. So, but since you don't have that and I don't have that, it's better for us to just be dollar cost averaging, right? This is why I don't suggest you move around so much, because most of the people that are part of this community that we watch on YouTube, we're just regular investors, right? We don't have a group of people that are helping us out, right? We don't have this stream of people that are giving us what we need, managing our portfolio, right? So because of that, we don't want to miss the good days, the wins, right? Remember, there was a study that said that if in 20 years, if you miss the best 20 days in the stock market, if you miss them because you're trying to time the market, jump in and out like the pros and the institutional investors do, if you miss the best 20 days, your portfolio returns over the course of 20 years can be cut in half by 50%. So because of that, and we don't have the experts, I always say stay in the market in these volatile times, right? So you don't miss the best days, because the best days of the market always typically follow some of the worst days in the market. And if you're out of the market because of those worst days and you miss coming back in the market, your portfolio over the long stretch, 10, 20, 30 years, could really be affected in a big way, right? Just missing the top 20 days cuts your portfolio performance in half over the course of 20 years. So you don't want to do that. You don't want to take the chance. If you're an institutional investor, if you're, Geico, or you're one of these, large insurance companies that are invested in the stock market, you treat that a little different, right? So for me and you, we don't take this geopolitical news and get out of the market. We just stay in there. We weather some of the storms to stay in there. But the big boys are leaving, right? So they're out of there. Let me see who else we got in the chat. I appreciate you being here. Let's see here. Oh, not French, but hello. Okay, my fault on that. Let's see. April 7th, I looked at the charts, and if you jump around top, boom, boom, boom. Okay, somebody checking in from D.C. Good to have you. From Washington. We want to put an R on that, or no, I'm not sure. Washington, D.C., representing Tennessee is in the house. So U.S. equities are bound to pull back. Okay, so when the stock market opens tomorrow on Monday, you will probably see a pullback, maybe a 0.5%, maybe a full percent of the S&P 500 on Monday morning, which is going to okay. If you go back to June 13th, when Israel first struck Iran, right, there was a pullback, right? So typically, when this type of thing happens over the weekend, there's a slight pullback. Sometimes, some people may say, hey, did this happen over the weekend so that it doesn't affect markets in a huge way? If this had happened on a Tuesday or Wednesday, we might have saw huge dips in the market. So I think we're going to see a slight pullback. So you got to remember, markets get emotional, right? Markets are emotional. But smart investors who are individual, regular investors like you and me are typically going to stay the course. Stay calm, stay focused, look for potential opportunities, right? Because whenever there's chaos, there's opportunities, right? Financially. Listen, if we all of a sudden see chaos in real estate, guess what? That's gonna spawn some opportunities in real estate. Think about what happened in 2008, 2009, 2010 in real estate. When you had everything going haywire, you had a bunch of foreclosures that popped up and hit up, and guess what? People were picking up real estate for pennies on the dollar, because chaos allows for opportunities, allows for smart investors to come in and swoop through and say, let me buy stuff on sale, whether it's real estate, markets, gold, whatever it could be, right? So you're going to see some pullback probably the first thing in the morning, right? Also, just a quick mention, not to go too deep, but the volatility index, what they call the VIX report, what they call the fear index, whatever you want to call it, right? It's sort of spiked up, right? Spiked up, and I don't want to go too deep into it, but when the VIX is high, it's sort of like the weather forecast, right? So when the VIX is high, it's like they're predicting storms, so to speak, right? It means people are thinking that prices in the stock market are going to jump up and down a lot. They're going to have a lot of volatility. So the VIX indicator goes up. When the VIX indicator is low, it's like the weather forecast is forecasting for calm weather. But when the VIX index goes up, it's like, oh my goodness, something's going to happen. There's going to be a lot of volatility. We're not sure, right? So the VIX indicator, or what we call the fear index indicator, is up, right? Because people are scared about the stock market right now when something large like this happens on a geopolitical macro. This could be a huge thing. I don't think a lot of Americans who are shielded from this thing understand how big it could be when you start bringing in partners, Iran's partners, America's partners. The next thing you know, this Middle East conflict could turn into more than just a conflict. It could be an all-out big issue, right? So the markets are reflecting that volatility and that sense of urgency or scared, whatever you want, fear, right? So the VIX is a reflection of investor uncertainty, and it's up right now, right? It also indicates what's going to happen in the future. And I'm not talking necessarily futures. I'm just talking about expected future price fluctuations, right? So think about that. Another possible thing that could happen in the stock market that you should be aware of if you're an investor is oil prices, right? The pressure on the cost of oil. Oil could likely, and I would say could likely, probably will jump, right? And we could probably see oil getting up around $90 or $100 per barrel. And that's going to obviously, listen, if you're an investor, think about this. That's going to probably push your energy stocks higher, right? So if you're an energy stock person and you have energy stocks, individual stocks, or if you have energy in as a large part of your holdings in an ETF or an index fund, you might see an increase in those energy stocks, right? Also, I want to mention this expected rotation of the large investors, the institutional investors, into safer, more safe haven type stocks, your golds, your treasuries, your bonds, right? Some of this, your cash, right? Your what they call fixed income stuff that has low volatility, but also doesn't have high return, right? The cash, the bonds, and things like that. You should be thinking and looking at that. I'm not saying do it necessarily as a regular investor, but just understand that's kind of how the market works and sort of what some of the plays are for some of your big folks. There's also going to be some pressure here coming up in terms of the stock market, some pressures on some more riskier assets. I know some of you out there, and we've had you guys in the lives before that say, hey, I'm big on international stocks. I'm big on emerging markets, emerging equities and emerging markets. You got to be careful because those can sense a little bit more volatility in these types of times, right? If you're invested in developing countries, let's say you have a lot of stocks or money or investments in, say, Mexico or Indonesia, or let's think about another one, Brazil, maybe even like South Africa. I mean, they're not necessarily, they're emerging markets. I mean, they're not developing countries necessarily, but they're emerging markets. You could see more volatility there. So be careful if that's your play in terms of your stock market investing in this type of chaotic environment, right? The other thing that's important to mention that we should know as stock market people or people that invest in the stock market, I'm just trying to give you all these things, guys, because you need to be aware and informed of how the stock market is playing into this whole thing. And big shout out to JT Coin Rings. I appreciate you. Thanks for the super chat, man. He's been following me since for 3 or 4 years. So I appreciate you, JT Coin Rings. I appreciate you more than you know. Thank you so much for dropping that. But the dollar, this is the other thing you got to know. The dollar, we may see some strengthening of the dollar, right? As these large institutional investors, these global investors, so to speak, as they seek more safe places to put their money. Remember, safe places to put your money for institutional investors are your fixed assets, your cash, your bonds, your money markets, your stuff that has low returns but less volatility. Because what an institutional investor does is they say this: oh my goodness, the stock market is about to go down. What are we going to do with our $75 million? Let's move $50 million into a bond that we know is going to give us a 3% return, so that we don't have to take the negative 5% return that's coming up. So they move their large holdings into safe places so they can get a 1% return as opposed to getting a negative 10% return in the market. That's what the big boys do. Now, we're not big boys. I'm not saying you can't do that. If you're a savvy investor and you're watching this channel and you've been around for a long time, you know what you're doing, and you want to move 30% of your portfolio into a US 10-year treasury, a 30-year treasury right now, whatever you want, cool. And get you're almost guaranteed, not guaranteed because there's always risk, but you want to get that guaranteed 2% or that close to guaranteed 2%, 3%, because you know the market is about to dip, right? To date, I think where stock market is up, what, 1 or 2%, maybe 3% for the year. And you say, look, this type of volatility is going to make this thing drop down to negative 10, negative 20 over the next 30 days. I want to move my money, and I'm an institution. I'm not an institutional investor. I'm a regular investor, but hey, I know what I'm doing. I'm not mad at you for that, because that's what people do. But the problem with us doing it as regular investors is we move our money and then we don't know when to put it back in. And so because we don't know when to put it back in, we lose. And this is what you got to be careful of. But that's what happens with these big investors, right? They seek a safe haven type of investment when everything goes crazy and you got chaos, right? And the dollar, because of that, the dollar is a safe investment, a safe haven. So the dollar becomes becomes strengthened and gets stronger because of that, right? Another thing you got to watch out for, and I'm just throwing these things at you again because you guys are regular investors, most of us, right? We're just been doing this thing 3, 4, 5, 10 years, 15 years, or maybe even less, right? Or some of you don't even invest in stocks and you're wanting to. But these are things you got to be thinking about when you do. The other thing you got to think about in times like this, let's see here. Boom, boom, boom. Somebody said, I find when, boom, 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 I bought gold 10 years ago. Bought gold 10 years ago for $900. Now gold is at $3,400, right? Now, an ounce, right? Now, gold 6 months ago was only $2,200 an ounce. So gold has really been like boom, boom, boom in the last 6 months or a year, right? So the other thing to think about, when you have tensions in the Middle East, like we're seeing right now, tensions in the Middle East between Israel and Iran, and now America and Iran, and while we're waiting to see what Iran is going to do and if they're going to retaliate, if anybody's going to jump in the side on Iran, right? You got to think about a spike in oil and some of these commodities, like somebody mentioned gold. But producers of gold and energy-related stocks could rally. I'm talking about how to take advantage of chaos here. Now, again, as I said at the very beginning, our prayers go out to all of those that are involved in this particular war or these strikes and things going on. American side, Iranian, whoever you are, human beings that are involved. Our prayers go out to you, families, etc. But one of the things as investors that we got to be thinking about is, how do we take advantage amongst the chaos? And I know that might sound kind of cruel to some of you, or a little harsh or brash, but this is how the world works, right? And sometimes when there's chaos and things going wrong and things going bad, guess what? We can take advantage of that from a monetary standpoint in terms of our investments and so forth. And it happens all the time, right? Let's see here. Somebody said 20% of the world's oil has just been cut. Somebody says buy oil. Let's see here. Hey, how you doing there? Vanessa, good to have you on here. Corey, good to have you on here as well. So think about the price gains and the boosting of that particular sector, the energy sector, right? Now, I want to throw another monkey wrench in here. Think about Fed rate policy. Just a few days ago, we did a video or two about the Fed rate, the Fed deciding to leave its Fed funds rate between 4.25%, 4.5%, leaving it steady, not reducing it. Now, hindsight is always 2020, right? So when you look back at that decision, maybe that was an okay decision, right? Because you look back and say, wait a minute, there's a lot of volatility going on right now. It may not be a good decision. We don't know that, right? But the Fed policy remains pretty much stuck on not decreasing the Fed funds rate, not lowering the rate, right? If you have a sustained shock in the oil supply, right, that could maybe delay Fed funds rate being cut even further, right? If you and the reason we're concerned about oil, because obviously this is in an oil-rich area of the world, right? So all of those things could keep some of the, what I would call the rate-sensitive sectors of the stock market volatile for longer. In other words, what are some of the rate-sensitive, Fed funds rate-sensitive sectors in the stock market? Meaning, what sectors of the stock market are sensitive to what happens to the Fed funds rate? Financials. If you're in the financial sector, you're invested in JP Morgan Chase, you're invested in Bank of America. That's a financial stock. That's part of the financial sector. They could see some more volatility because the Fed funds rate is going to remain where it is and not be cut. If you're in the real estate, maybe you're invested in some REITs, maybe you're invested in utilities, right? Or consumer discretionary, right? Your Nike stock and things like that. Or if you're invested in the small cap stocks, let's talk about small caps for a hot second. Small cap stocks, which are notorious for being volatile anyway because they're dealing with small businesses, when the Fed funds rate does not get cut, those stocks remain more volatile, right? So you have to be thinking about that in terms of the Fed funds rate, what all this means. There's a lot of different caveats that come into play. Some potential problems. Now, here's some potential problems the stock market could see. And I'm just throwing all these things at you because I want you to be wise investors. Even if you've been investing for 6 months or a year or 2 years, you can still stand to get some wisdom in terms of how you're approaching the stock market in volatile times like this, when we see such a major thing happen, which is major, right? When America strikes a country, that's major, huge, right? So the stock market could see a tumble, guys. We could see it go down in that territory of bearish market, 20% down or more, right? It's not happening right now. I'm not saying that's happening. I'm not saying it's likely to happen. I'm saying it could happen, right? There's risk that you should be keeping in mind. Okay? Let me see who we got here. I'm going to see if I can look at it. Okay, so there's risk you should be keeping in mind if Iran decides to retaliate. So have on your, I don't care who you watch, your CNN, you know, your legacy media, your ABC, CBS, NBC, MSNBC, CNBC. I don't know how many NBCs are there. I mean, there's a ton of them, right? Your CNN, your Fox, your AP News, USA Today, whatever you read. You have to be listening and paying attention as an investor to see if Iran decides to retaliate, right? The stock, if they do decide to retaliate towards America, you know, hit an American base or knock down an American ship or you know, knock an American ship or knock out an American airplane, whatever could happen, right? Be aware that that could have a major effect on everything that we're talking about here, right? So let me also say this, because I don't want you to be in such a panic. I don't want to make this like I'm scaring you for clicks, right? You don't need to. I'm not trying to scare you just to get you to click on the video. I'm just trying to make you aware, okay? Historically, when you see a geopolitical dip in the stock market because of something major that happens like this, usually, as soon as tensions begin to ease or slightly before they ease, we see the market go back up. So if you see a weakness tomorrow when Monday stock market opens up, That could be an opportunity to buy the dip if you're into buying the dips. And I'm not a huge buy the dip person. I'm a DCA, dollar cost average person, but I'm also a person that says you need to dollar cost average plus. And the plus is buy the dips if you have the cash to buy the dips, or you have the your money in some sort of a fixed income asset, and you see a dip, you got $50,000 laying around, and you see a dip. There's nothing wrong with buying a little bit of that dip if you see a dip, right? But the weakness that you see first thing Monday morning in the stock market could be an opportunity to buy the dip. You need to know this as an investor. But also be aware that typically when you have these geopolitical things happen, soon after, I'm talking midweek to late midweek of this week coming up, you could see some rebounds. If Iran does not strike back, you're going to see you're probably going to see the market go down at the beginning of tomorrow. But come midweek, late midweek into next week, if Iran never does anything, you may see the market rebound, right? The market isn't necessarily tied directly always to what's happening geopolitically. Sometimes it is, sometimes it's not. You got to be, and this is why I say I'm a DCA person. I'm a dollar cost average person, because when you dollar cost average, you don't have to know these moves to make them. You don't have to follow everything so closely to make them. You just put your $100 a week into the stock market, into your ETF and index fund, and you're done. You don't have to watch everything on a regular basis to see where you can be strategically dipping in. And listen, you don't have 20 investors around you to help you make those decisions. So for me, it's better to dollar cost average, and maybe do a little dip, buying the dip when you have an opportunity. Somebody said, still working on my somebody said Iran military defense decimated. Let's see if it goes a bear market, then it's time to buy more. Absolutely. As a strategic investor, if you do see the dip, you do want to buy a little more if it's possible. Monday's market is probably going to open with some weaknesses in the S&P 500, right? Some of that's going to be determined by what happens with Iran over the next 12 hours. Not to mention what's going to happen with oil, right? What's going to happen with oil? A lot of this is going to depend on Iran's response. But any sign of de-escalation could stabilize the markets midweek. Just be aware of that, guys. Here's what smart investors are typically doing right now. They're being strategic. Either they're dollar cost averaging and turning away and saying, I'm going to check the news every now and then just to check it out. But those that may have experience, if you've been in this thing for 15, 20 years, and you've had experience navigating around and through geopolitical crisis like we see right now and chaos, you're not going to be panicking, right? So don't panic, right? Don't panic. If you decide to go ahead and play like an institutional investor and move some of your money into more safer assets to hedge against the volatility, cool, I'm good with that. But you don't necessarily have to, right? Me personally, let me tell you what I'm doing. Me personally, I'm not buying any dips right now. In my personal portfolio, ETF portfolio, stock market portfolio, which I have two different portfolios, in neither one of them am I buying dips right now. Okay? I don't have a bunch of cash on the sideline I'm waiting on. That's not my part of my strategy right now. My strategy is just dollar cost average. Right? I'm not going to be moving to treasuries, moving to cash equivalents or fixed income. No. Right? Not at this point. Right? But I'm not mad at you. Listen, this is a channel that says, look, everybody's personal financial situation is different. And everybody's risk tolerance is different. And everybody's end goals and core values and principles of investing and all that's different. So if some of you decide to do it, cool. I'm not beating you up for that. But for me, I'm not doing it. If you want to allocate 5 to 10% of your portfolio to get involved in some of the short-term volatility, to hedge against some of the downswings in the market, I'm not against that, right? I don't hold on to these hard and fast rules. I do hold into a few hard and fast personal finance rules, but I don't hold true to really these hard and fast rules in the stock market, because I realize that just as everybody has a different thumbprint, everybody's got a different investing thumbprint, right? And have different ways of thinking and looking at these things, right? If you want to, here's something you might consider doing if you're a stock market investor. You might consider adding some exposure to energy and defense stocks. That's my personal opinion. If you're looking for a stock play right now, you might consider saying, okay, hold up. Tensions are high between Israel and Iran and Israel. Tensions are high between, Russia and Ukraine. Tensions are now high between America and Iran. Okay, there's a sector of the stock market that may benefit from this, and it's called energy stocks and defense stocks, right? So here are energy ETFs and energy index funds. Or here's what I'm saying, and I own these two stocks, and I've owned them for a while: ExxonMobil and Chevron. Those are two energy stocks that may benefit. Maybe there's an energy ETF, XLE, may benefit. Now, I'm not telling you to go buy those things. I'm just telling you that those are the types of stocks that may benefit from this chaos that we see going on, right? And when I say, let me just clarify this for you guys. When I say defense stocks, I'm talking your Northrop Grumman, right? Your Lockheed Martin, Raytheon, right? These are your aerospace and your defense stocks, your companies, right? They stand to potentially benefit. I just wanted to throw that out at you because sometimes when we do these videos, people say, tell me the exact. That may be an exact sector and group of stocks and ETFs that may see some benefit from this geopolitical chaos, right? When geopolitical tensions reign, you often see higher oil prices, right? And you also see more defense contracts between governments and these defense companies like Northrop Grumman and Raytheon and so forth, right? Those things go up as tensions go up, as the potential for bigger wars go up. Those defense and energy stocks seem to have some benefits. So if you're thinking, those typically have an urgent and an immediate increase, right? And if you buy the defense stocks or the aerospace energy and companies, energy stocks and aerospace stocks, you may consider holding them for several months, right? Depending on what happens with escalation. If escalation dies out, nothing, no big deal, it's over, boom, peace talks, okay, maybe not, right? But otherwise, if tension continues, you may consider holding on to them for a while, right? You might see a dip in some of the technology stocks, your Apples, your Microsoft, right? Your broad-based ETFs like QQQ that specialize in tech, right? You may see a dip in some of those. Be looking for that. Sometimes you see market overreaction, and sometimes you see for us as investors, you see a temporary discount in some of those stronger volatile companies. I say stronger volatile, but like your Apples and your Alphabets and things like that. You see a short discount, right? And those are opportunities to buy a dip, right? You also, let me give you this little tip, okay? As soon as Monday morning hits and you see that slight dip, you may set some limit orders on Monday morning because of some of the early volatility that we may see in the stock market tomorrow morning, right? Just limit orders just mean you buy stocks in case they dip down to a certain limit. Then you say, oh, I want to buy 10 shares when it dips down to $100 per share. It's trading at 102. It went from 102 to 110 to 102 early in the morning. And then you say, boom, I want to set a limit for 101. If it dips down anymore, boom, you're good to go. You buy it at 101. I'm just saying that's just a strategy you may consider to buy some stocks on sale first thing in the morning, right? The other thing you want to think about doing as this tensions are set, right? You may, and if you're a savvy investor, if you're not a savvy investor, you may not want to do this, but you may want to adjust your portfolio. May not be your whole portfolio, obviously, but a portion of your portfolio towards more risk-adjusted opportunities in the stock market, right? So you reduce your exposure in the market to some of the more speculative stocks, your small caps and so forth. I don't want to dig too deep into that. I don't want to get too technical. But you may also want to consider adding some low volatility ETFs, some dividend ETFs for some stability, your SPHD, your VYM, your VIG. That's another potential play. I'm trying to give you these plays as stock market folks, right? Consider, and also consider your oil related ETFs and so forth. Your XLE I mentioned earlier, but your USO, your tankers, TNK, DHT, think about those too, right? Okay. Also, keep in mind OPEC. I want you to pay attention to what's happening with OPEC and Iran's response, right? OPEC is the organization of petroleum exporting countries. And, you know, OPEC plus and OPEC, they determine what the oil supply is from major oil producing countries. So keep your eye on them in the news. What is OPEC's response going to be? Because that's going to play a role in what the price of gas is at your local gas, your local gas station, right? Right? See what they're saying and see what they're going to do. Even amongst the panic guys, focus on your long-term winners. Stay invested. Don't just get out the market, right? Please don't jump out the market, right? Me personally, I'm a long-term investor. I'm going to dollar cost average, typically, as I have always done, into some broad-based index funds, right? Broad-based index funds and ETFs. I'm going to be doing that, right? Again, history shows that these geopolitical chaos situations, they usually recover within weeks. Maybe if it's super serious, it takes months, right? Sometimes within the week, right? That's just looking at some of the patterns from some of this stuff, right? But markets dip on fears, right? And the market tends to clear itself up and rally afterwards, shortly afterwards, sometimes within a week, sometimes a month, right? Some of you may be out here, and listen, let me just say this. Some of you may be options traders. I mean, selling puts and, that's cool too. That's not my thing right now. That's not what I'm doing. But I'm just saying that may be some options as well as we see markets dip and go down, right? But stay calm, stay rational. Smart investors know that emotion of the market equals opportunity for us investors. Let's see what we got here, guys. Let's see here. Boom, boom, boom. And I appreciate the chat, guys. Some of you guys are dropping some real science in the chat. Science, I appreciate that. Hey, Joseph, thank you so much for being here and chiming in. Appreciate you. Let's see. Okay, great. Fantastic, EK. Fantastic. So, again, overreaction creates value buys for us investors who dollar cost average or buy the short dips. Volatility in the market is a tool, guys. Use it as a tool. Don't look at it as a threat. Don't get angry. Don't get mad. Don't get happy. Just look at it as a tool for you to use in your investment strategy. Got to be watching for Iran's next move, though. What is their response, right? Watch the headlines. Monitor the oil. Monitor the shipping disruptions. Monitor their response, but also monitor OPEC. Be looking for what OPEC says. Thanks a lot, Crypto Crossroads Show. Appreciate you for the super chat. Thanks so much. Thanks so much. I appreciate you. Big shout out to the Crypto Crossroads Show. Maybe you guys want to check out their show over here on YouTube as well. Now, don't follow the crowd. This is what I'm saying here, right? Follow your fundamentals. What are your this is why I tell people, before you go investing in the stock market and getting super serious, putting all your money in the stock market, you got to have an investment strategy. You got to have a philosophy. You got to have a set of core beliefs. You got to have a set of core principles. What you believe about the stock market, what you believe about, what is your risk tolerance? You got to know all that. Have it written down. What are the fundamentals you look for when investing in a stock, right? So you got to have all that written down so you can know not to follow the crowd. How do you know not to follow the crowd? You follow your core principles, right? You follow what you've been following to get to where you are right now with your investments. You follow your fundamentals. You don't follow the fundamentals of other people because they're not you. You have a unique thumbprint, unique investing thumbprint. But sometimes new investors, they don't know what that thumbprint is, and they end up following Kramer and following the crowd. Don't do that, right? Geopolitical chaos can be profitable to you if you follow your fundamentals. Be patient, be prepared, unemotional, right? Before let me do this, guys. I haven't done it. Hit the thumbs up button. Do me a favor and hit the thumbs up button. I just got to do a couple of housekeeping things. Smash the like button for me if you're getting any value at all out of this basic common sense look at what happened with Iran and America striking Iran and this chaos. Do me a favor and hit the thumbs up button. Also, I got to take a shout out to you guys. I got to take a moment to shout out Moo. I've been using Moo for about a month. I like Moo. I surprisingly liked it. I tried it. I like it as an investment app. If you're serious, a serious investor, listen, check out the Moo investing app if you're not using an app or if you want to use another app. It's very, very beginner friendly. They sponsor me on a few of my videos nowadays, and they give you all the pro level tools right there on them. I got to give a shout out to them. Kind of a commercial break, right? They have easy to read charts, super. They have all the live market data stuff you need. Super easy for beginner investors, right? All the stock picking news that you need, all that stuff. Right now, Moo is running a pretty sweet special for you where you can get up to 60 free stocks if you open an account and you fund that account. So I'm going to have a link below when this goes live on YouTube. I'm going to have a link below. Check it out in the description box if you're interested. I am a user. I don't endorse or sponsor anybody until I use the product for weeks on end. I've used it. I like it. That's why I'm talking about it to you guys. If you're looking for a solid app, check out Moo. I've been surprised with it. I think it's pretty cool. So, again, don't forget to share this video. If you know an investor, somebody who's looking to invest, share this video with them for me. And do me a favor, if you're watching this on the replay, drop a comment and let me know your thoughts. How do you think this strike that America made on Iran is going to affect us? What do you think Iran's response is going to be? What do you think is going to happen with oil and the price of oil per barrel in terms of our gas? What's that going to do with it? It's going to go up. Who knows? Was it a good move, the right move? How are you preparing? Let me know in the comment section below, all that stuff, guys. I do read my comments. Now, let's talk about what we should be thinking about and doing as consumers in America. Really around the world, to be honest with you, because this has the potential to have a ripple effect around the world, right? I don't care where you're watching it. You're in the UK right now. You're in parts of East Africa, or obviously East Africa being close to the conflict. But if you're in West Africa, South Africa, if you're in South America, maybe you're in Canada, this could have a very, very big effect on all of us worldwide. That's why this is an important video, right? You need to be preparing, all of us, I don't care where you are, preparing for higher gas prices, higher energy prices. Again, why? Because oil prices are expected to probably go up as you have conflict in the Middle East, more and more conflict and more tensions. That's where quite a bit of the oil, not all the oil in the world comes from the Middle East, right? I think Brazil has the largest set of oil reserves in the world. But the point is, a lot of the oil that we use and we ship to make what we need in terms of oil comes from the Middle East, right? Now, America has some of the biggest, I think maybe the biggest or most oil that we could produce in the world comes from America. But the Middle East is a huge player, especially those OPEC nations, right? And they're talking about one of the straits out there, Strait of Hormuz. I'm not sure how to pronounce it. But the point is, gas prices could go up around the world. Energy prices could go up around the world. Fill up your gas tank. I don't know. Listen, we don't know what Iran's going to do tonight, tomorrow, right? Today, right now, an hour, as we speak. So get your gas, right? Maybe you have some tanks, extra gallons of gas that you can fill up in your garage or wherever, your barn, wherever you keep it. But spares of it, right? But the price could rise, right? Cut back on necessary driving if you have to. I'm just giving you practical stuff to think about. Adjust your household energy, use if you can. I mean, I'm being real practical. Thermostats, heating elements, whatever you're using, seal your drafts because it's going to be cold. Who knows? It's not cold now. Obviously, it's summertime in the northern hemisphere. Stock up on some of your non-perishables, your essentials. I've talked about this before in these videos. You want to have some canned goods and some non-perishables laying around. You just don't know. I'm not a prepper. I'm not saying I'm a prepper, but this geopolitical unrest can disrupt global supply chains, right? Especially things that are linked to oil, your plastics, your packaging. This is food prices, right? Because your packaging, all the stuff you see, that's oil. It took oil to make it, right? Your food, it takes oil to produce food, right? So buy your bulk items, your rice, your beans, your toilet tissues, go to Sam's. No, I'm not going to say Sam's Club. I own Costco. Go to Costco, right? I own some Costco stock, right? Go to Costco and stock up, right? Get your bulk items, right? I don't care, Sam's Club, Costco, but I own Costco. That's why I say Costco. Your household staples, your diapers, your detergent, your deodorants, whatever, right? Stock up on that stuff. You want to get ahead of the potential panic if Iran decides to make a move or other countries decide to join in. I'm not telling you to panic. I'm just telling you to be ready. There's a difference. Maybe as a consumer, you avoid some big purchases right now, right? There's uncertainty right now, right? There could be uncertainty in your job markets. Maybe you need to be saving more money right now, having more liquid money in your savings. Instead of having, all your money, $100,000 in stocks and bonds and ETFs, maybe you have, $90,000 in those things, and you have $10,000 in your money market account, your CD, your cash equivalents, right? I'm just giving you things that we as consumers need to be thinking about in these chaotic times from a geopolitical macroeconomic standpoint, breaking it down to our microeconomic household finances, right? Maybe you need to pause some of the big ticket items. Right? And see, America is sort of cushioned from all this volatility because America has not experienced war on American soil in a long, long time. So sometimes we just go about our lives like it ain't no big deal, right? We buy our cars, we buy our big appliances, take our vacations, and we're not thinking, hey, there's big time tension going on. It could affect us at home. So I'm saying if you're an American, maybe put a halt on some of your big ticket purchases, right? Because you just don't know, right? And of course, your debt, your high interest debt, you want to chill with all that, right? Don't take on no new big debt if you can. Sort of take a wait and see approach is what I'm telling you as a consumer. Revisit your budget, cut waste, all that good stuff. Tighten your monthly budget up, right? Tighten up your emergency fund, your emergency money, right? That's almost like, earlier I said, hey, the big institutional investors, they move their money out of the stock market and put it in more fixed income stuff, the bonds and the cash. Hey, you need to start tightening up your cash, right? Your emergency fund. Track your dollar, avoid lifestyle creep, and don't panic. Stay informed, but don't panic. Watch out for the media where they try to hype you up, right? They try to get you hyped up in fear. They kind of, try to put fear in you, right? Listen, anybody that I know that keeps their TV on CNN all day, they're always hyped up and panicking because they're watching fear all day, right? Breaking news across the bottom. Be careful about that. Fear-based media will lead you to fear-based financial decisions if you're not careful, right? So you want to be careful about what you take in your brain, social media, TV, right? Also, be sure that you're deciphering what's real and what's not real and why did they say that to make you tune in as opposed to turning over to the other station? They left you with a cliffhanger before the commercial, right? Part of that is fear because fear sells, right? So be careful with that. Stay tuned to this YouTube channel because I talk about this stuff on a regular basis. Let's see here. I've been stockpiling items since November. Just recently started buying XRP. Congratulations to you. Let's see. Somebody said, how much do I bench press? Who cares? Let's see. Been a while. Hey, the Walla Mala's in the house. Good to have you, Walla Mala. Appreciate you. Have been supporting me on this channel for a long time. The Dan the Man Cunningham just started listening to your channel and appreciate your straightforward delivery. Also appreciate your no nonsense attitude. Must be our age. Hey, 50, almost 55 years old. Yeah, must be our age. Dan the man, appreciate you being here, and thank you so much for that super chat. I appreciate you more than you know, guys. Let's see, no big ticket items. Wait. Let's see. I don't eat canned goods. Okay, if you don't eat canned goods, I don't know what to tell you. All right, but you need to be stockpiling something just to be on the safe sort of safe here. I've heard this over and over again. I've been living like this for the past 25 years. Congratulations to you for that. Greetings from the Carolinas. Good to have you here. So I just appreciate you guys, but stay tuned to this channel. We talk personal finance, guys. I'm telling you, we talk personal finance. Listen, all of this stuff is tied together. Some people say, well, I heard a comment. Let me just talk to you guys. I heard a comment the other day ago on my YouTube channel. Somebody said, I stopped following your channel when you started talking about some of the bigger things about what's happening right now in the large picture of economics. But listen, we can't do anything about the macro picture of what's happening in America, inflation, etc. But we need to know about these things, right? I'm not saying live your life according to the inflation rate or according to what the Fed does with the Fed funds rate. But what I am saying is you have to be aware, because that's going to help you make better personal financial decisions. If you know about what the Fed funds rate is, listen, a lot of times people are scared and they're fearful because they lack the knowledge. They're scared and they're fearful what's going to happen with their money because they just don't know. They don't understand what's happening with the larger picture. And my goal is to say, listen, if you know what the Fed funds rate really is, how it's calculated, how do they figure it? If you knew that the Fed funds rate was just the rate that banks charge one another for overnight short-term loans to each other, if you knew that, it might help you make a better decision about the loan that you may want to go get for your car or your mortgage or whatever, or your short-term loan for your credit card. You might make a better decision if you understand the big picture, right? So I don't want to talk about the little picture, personal finance, getting out of debt, all that stuff all the time. I also want to infuse the big picture stuff so you are a well-rounded and informed investor, a well-rounded and informed consumer, a well-rounded and informed person that wants to put their money in real estate, a well-rounded and informed consumer, right? This is how you grow with your personal finances. You understand the big picture, and then you know how that big picture affects you and your small picture, your four walls, your household. So sometimes we do videos about your four walls. The most important parts of your finances is what you do with your budget and your debt and your assets and liabilities. And sometimes we deal with that, but I need you to know the big picture, because that's going to help you formulate your philosophy on the small picture. So I deal with them both because I want you to be a well-rounded consumer, a well-rounded stock market investor, not just a person that watches somebody on YouTube and buys what they tell you to buy. No, that's not how you invest. You need to know how the conflict over in Iran, the strike that happened last night, how should you be reacting? You should be looking at energy stocks. You should be deciding whether or not you're going to dollar cost average or buy the dip. You should be deciding whether you're going to move money into bonds or move money into money markets and CDs, or what percentage of your portfolio, what you're going to allocate here and allocate there. You got to know it all. Money is not in a vacuum, right? Money is the big picture. So I got to bring you videos about the big picture and the small picture, and I got to tie them together for you. That's part of what I do on this YouTube channel. So that's why I do these type of videos too, because I'm trying to help you be more knowledgeable and understand how that big stuff affects the small stuff, right? I hope that makes sense, guys. I didn't mean to, sometimes I just go off on the tangents, right? And I just did that. But hey, that's okay. Listen, the deal for you guys is this: regular investors, regular consumers, regular small business owners, avoid this emotional scrolling and this emotional panic and this emotional trigger that you're going to see. Focus on the facts. That's why I started this video with the facts of what happened. Not whether or not I think President Donald Trump should have went to the Congress or not went to the Congress, whether or not America should have struck Iran and got involved or not got involved. Look, I can't affect any of that, right? That's not this channel. This is not a political channel. But now that it's happened, how do I react in terms of financially, right? That's what it's about. I'm focusing on the facts, not focusing on the fear. I'm focusing on the facts, not focusing on your opinion about politics or whether you're Republican, Democrat. I don't care. Doesn't matter on this channel. You could be independent. You could be anything on this channel. We're dealing with money on this channel. We're not dealing with where you stand politically, right? That's a different channel, and that's cool. Nothing wrong with that, right? But how do we react as consumers in this time of volatility? Stay calm. Cut your waist. Be prepared. Be knowledgeable. That all that stuff. If you do all that, it's going to stop you from being so panicked, right? Money should always be working for you, David. No doubt. Facts over everything. No doubt. Absolutely. Appreciate that. So discipline is going to beat emotion in these times. You guys, listen, do me a big favor. I need you to do this. This video has to go out to a bunch of people who do need to hear this video right now. This is important for today. It's going to be important tomorrow too, but it's really important for today. Share this information with somebody you know, guys. Drop it with somebody. Link this thing to somebody who you think could just use this basic information about what to do in this type of chaotic episode, chaotic time. Share it with your investing group. Maybe you got a Facebook group or something, or you got some folks on IG, or you got some folks over on X or Twitter or whatever. Share it with your group of people, right? Share it with your cousin who's talking about CDs, who's talking about money market, and they're scared of the stock market. No way I'm going to put my money in the stock market right now. You see what's happening? No, the stock market has been at 2%, 1 or 2 or 3% for the year to date. That ain't a time to not be investing, right? That's not what smart investors do. They don't get hyped up. They don't get mad, angry. They don't get scared. They take advantage of chaos, right? They take advantage of chaos. And that's what I want you guys to do, is understand how to smart investors take advantage of this chaos. And I'm not saying, again, I'm saying prayers out to people that are involved, right? Our heart goes out to people that may have to go fight or may have to be maybe involved or affected by what's happening with this chaos. But you can take advantage of it from an investing standpoint. Share this with your investing group or your cousin. Get the bonus stocks from Moo in the description box below. And remember this, guys. In times of chaos, smart money don't panic. It prepares. You got value from this video, hit that like button for me. Just tap the like button. That's all I ask you to do, is tap that like button, share the video. If you're not a subscriber to this channel, please consider subscribing to the channel. And I appreciate you guys being here. Turtle, thank you so much for being here. Mrs. Moore in the house. I got to give a shout out to Mrs. Moore. She said, please like, and she said, please subscribe. Thank you so much for being here. Mrs. Moore is in the house, helping me regulate the chat. I certainly appreciate you, Mrs. Moore. Feel free to reach out to me, Mrs. Moore, as well. Money markets and CDs are really smart investment vehicles for the short term only. True. Okay, for the short term only. But if you're like me, I'm not playing the guessing game right now. I'm sticking with my dollar cost average personally. That's just me personally, right? Let's see here. Prepare accordingly. Fed is keeping rates higher for longer. Listen, the Fed didn't lower the Fed funds rate. The Fed is likely not going to lower it in July, especially with the increase. We see some increased tension going on in terms of the Middle East with what happened last night. I think the Fed may look at September as an opportunity to lower rates if this tension dies down, right? And the threat of inflation goes away. Let me say this again. The Fed has notoriously been late lowering rates. Notoriously in the last several years, late lowering rates. So, will they be late again? We're not sure. We'll have to see. Somebody else said, I'm Bell, but already subscribed. Appreciate you being there, Dark Horse. Appreciate you being there, Latasha. I'm a new member. Appreciate you, Latasha. Let's see here. Gangsta, appreciate you being here as well. Let's see here. April. I like to give shout outs to people because if you take time to drop a comment in here, I like to say your name sometimes. It helps, right? It helps you, right? Some people go a lifetime and never get their name called on social media, right? JT again, JT Coin Rings again. Good to have you. Thank you so much for your support. Somebody said VOO for retirement. XLK. Let's see here. 1,000 watching now. Whoa, we're up there straight. The Strait of Hormuz closing. Interesting. I gotta check. I haven't checked the news like I thought I would. Somebody said, please make a video about how do you dollar cost average. How do I dollar cost average? I put a certain percentage of my money towards the stock market. Every time I get paid, I put a certain percentage towards the stock market. Every time I get paid. I do keep a small chunk laying around for times when I want a dollar cost average or when I want to buy a dip, but I'm not buying it right now. Somebody said, good morning. The Fed was also late on raising rates. Yeah, this Fed under Jerome Powell, the chair of the Fed, who's the chair of the New York district. I think there's 12 districts. The chair of the New York district is always the Fed chair, I think at least for the last 20, 30 years or 30 years or 40 years or so, right? So appreciate the subscribe to you. God rules, BA Bitcoin. Let's see. Happy Sunday back to you, Janelle, trying to figure out this out. No emergency fund to speak of. You better get an emergency fund to speak of as soon as possible, right? Salute back to you, David Jenkins. Fed needs to use Palantir. Palantir is one of those companies that has government contracts, and they could be pretty important in this. And this is why you see. Listen, I say this all the time. 1 year ago, this time 1 year ago, Palantir was trading around 20, 25 bucks. Maybe 8 or 9 months ago, Palantir was trading at 25 bucks. Now Palantir is trading, I think, over 140, around 140, right? Huge. Defense. Remember I said aerospace defense contracts? Palantir specialized over the last 20 years in government contracts, right? So more volatility, more government chaos, more government involved. Companies like Palantir, which there aren't many companies like Palantir, that's why they have such a strong moat, stand to benefit. That's all I just want to throw that at you as well. Somebody says, what about, let's see, how much money do I need to save to own Costco's kind of high. Costco's up around $1,000 per share. They ain't splitting no time soon. Not that I've heard. So you might want to save up your ducats and buy a little bit of Costco. I'm just going over some Q&A at the end here, guys. Let's see, Kathy Woods, she's doing okay right now. Yep. I'm buying the dips, some of my utility tokens. Love the channel. Thank you so much. Appreciate you being here. Terrence, appreciate your dad too. Listen, I just wanted to drop this video because you guys need to know how this may affect us as investors and as consumers. Stay in the know. Stay with this channel because I'm going to be updating you on what's going on with this as well as some of my other videos talking about personal finance. Again, hit the like button, guys. I'm going to jump out of here, guys. Hit the like button. Appreciate you being here more than you know. And I'm reading my comments, so drop me a comment and share this video. Check out Moo in the links below. As always, guys, I say this at the end of every video, almost every video. The absolute best person who's going to take care of the old you. Now, hang with me. The person that's going to take care of the 80, 70, 80-year-old you, even the 60-year-old you, is the 20-year-old you, the 30-year-old you, the 45-year-old you. The best person who's going to take care of that old you is not the government. It's not your grandkids and great-grandkids. It's not the nursing home. It's not the community. The best person who's going to take care of that old you is the young you, the you today. Right? You guys take good care of yourself and you take care of other people. Until the next video. Peace.